Hi, I'm Pratim Ranjan Bose, and you are watching Podcast with Pratim, presented by Iravati Research and Communication Center, or IRCC. I have with me Subhendu Moitra, founder director of Quos Advisors. Subhendu is an investment banker, an old friend, and a regular on this channel. We will discuss markets, growth, and monetary policy issues. Subhendu, I'm looking forward to a quick take mostly for the investors. The market has been turbulent in last couple of weeks or months, and though theoretically there is not much to be bothered, because if we look at last 6 months, BSE Sensex is up by 1%, as against 13% in China. I'm comparing with CSI 300. But if we take a 5-year view, then BSE Sensex is up by 88% as against a 5% decline in CSI 300. So, but having said that, in the short run, particularly the Q2 growth, below normal growth, below expected growth had been an issue. So, over to you. What do you think is making market a little turbulent?
I think there are a couple of issues as such, specifically if you see in last couple of months, especially before our general election, the expenditure of the government has not taken up beyond that. If I look at the various contracts is being for even for the Jal Jeevan missions and all, those have not started. Though people are expecting it to start anymore. So as we always discuss that our growth has a huge one of the main impetus of growth is basically the domestic consumptions, infrastructure, and other expenditure. So there has been a bit of slowdown on that, and that is being shown also. The growth is not that fast. That expected one in last couple of quarters. In addition to that, there is a too much. I think RBI's our rate of interest easing. That has not happened because of the inflation worry of the RBI. I think we discussed also in last couple of discussions which we had podcast with you, Pratim, where we said that maybe they should think the inflation without taking the food, because food inflation is actually hurting our overall inflation numbers, and because of that they are I think not relaxing the interest rate scenario at this moment. So this is one of the reasons I see shortly. So what has happened with the Trump election coming, and he's giving a lot of positive vibes about what he's going to do in future. So there is some kind of our rupee has weakened. There is a interest cut in US. So given that our FD our FI's flow money has come down, or rather gone out of it, and somehow there is also another view which I don't subscribe to, that some of the FIIs believe that India has grown for a long time and China has not grown for some time as such, so they should now look for China also. But I don't subscribe to that theory as such, because I don't think there is much reason, considering that US may think in a different angle. Much reason to think of high growth in China at this moment. But having said that, these reasons that there's an interest rate easing it at US and no such thing in India so far, and at the same time maybe our expenditure in infrastructure has not started after the election, which I think should start now, because after the election there was a state election, so I think there was some delay in that. So these are reasons I actually believe maybe causing such kind of things.
Yeah, pretty right. Inflation, particularly food inflation, had been pretty sticky. That is what is pushing the inflation numbers up. This is winters, and normally the vegetable prices. And in fact, in food, if we look at, actually it is the vegetables. And vegetables had been a concern for last 20 years, if I remember. And there are various factors to it, actually. Changing consumption pattern, changing farming practices, a lot of issues are involved, because vegetables is one area which suffers very seriously from, its transportation options are very limited and very costly. So that
The,
probably is the reason.
plus this year the rains were a bit erratic. Temperature rain there's a bit erratic also, so that has also affected vegetables coming in the right time. That also we have to appreciate, global warming or whatever.
Yeah,
But we have to live with that.
climate, erratic climate has become a part of the norm these days, but untimely rains do harm. And this year, I think it happened a little bit extra. Uh,
Yes,
but I don't, I mean, I have anyway, we will discuss it sometimes. I have different ideas, I mean, about the why food inflation is up. And I think we have to live in the era of high food prices, and which is also good for the farmer, mind you, right?
absolutely.
And in this case, we discussed also, and about whether the inflation numbers should be discussed, keeping food inflation out, or vegetables inflation out. And yes, I think the basic problem is that the fixed capital formation, which we were all expecting to pick up post-election, that didn't happen. So a lot of
Exactly.
worries are playing probably in the investor's mind, isn't it?
Yep, absolutely. And I know lot of contractors, they're waiting for some orders to be, coming. The orders will be issued, or the tenders will come. That's not come in last couple of months. Their expectation that just after the general election those will start. But it's not happened because some more elections came. So I think the government should start again pushing for those expenditures, which are very very crucial, especially for India's growth story. And we need such kind of things. Also, one more thing I would just like to, maybe we have to think long term. Maybe sometimes there is a worry in RBI mind that banks are not getting deposits because rate of interest, unless if they reduce rate of interest, they may not get deposit what they expect. But there I would say I think our Indian banking system for long has worked with a very high margin. So our banks expect at least 3% margin. Okay, that margin means whatever cost of fund and the cost of and the returns and all. But if you look at the developing markets, where of course the basic interest rate is low, but even that has gone up. But they work out 1 and 1.5% margin. I mean, that is what they're okay. I mean, if you earn more, it's fine. 3-4% is fine. But the question is, our banks or our lenders expect at least 3% margin, which is I think on the higher side. Of course, RBI also said that you should have 3% margin, because it was okay when the risks were very high. And we have to appreciate, with so many laws and other things coming, NPS coming down, and NPS has not gone up of late, of course. It's not only come down, it's not gone up. So our things have our system has strengthened a lot, and RBI has a lot of credit for that. I must say they have strengthened the system, the regulations. So those kind of slippages, those kind of wrong lendings are not happening. So I think we should also, the lenders should start thinking, working with a lower margin, maybe 2%, 2.5% margin. That is what they should target, not the 3%. There's always a worry that, oh, if I give so much to the depositors, then I need so much rate of interest, and then that's where the cost goes up, and which ultimately affects the economy. So I think the Indian lenders should start leaving, working with a lower margin. They should reduce cost. The main difficulty in having a lower margin is that they have to control their cost, and with the digitization there is a sufficient room for reducing the cost. And they should look for that instead of just going by the traditional way of expenditure. So this is what is another thing which I think we have to think long term, especially for the lenders, and which sometimes affects RBI. Right now they might be thinking, there's a shortage of the deposit for the lenders. They believe that if they cut the interest rate, then maybe the shortage may actually worsen. But uh, I mean, we should live with that. Internationally, it's fine. And secondly, I understand when the share market was moving very fast, there were a lot of people who doesn't understand share market. I mean, which is a lot of people appreciated that. Oh, you don't understand, but people are putting money in the share market. So now they've seen the other side also, because if you have seen, Indian investor didn't see the down of the share market after Corona, that dip. So they were always feeling that it'll all go up at a very high pace, and the money will go up. So it's better to put from bank to share market. So I think that mindset is not there, because now they have seen the dip, they have seen the upsides and downside of the share market. So they'll be more reasonably investing in that. They'll not put every money in the share market. So I think we this is the right time to cut the interest rate for Reserve Bank of India. They should do it fast. In addition to the government start spending.
You have hit a couple of points and very pertinent points. Number one is, when the market was booming, I found the banks are raising concern they are not getting enough deposits, right? Now, is it like that you have to force the consumer to go and put the money in the bank for low
You,
returns?
you cannot. That's what
Okay.
I'm saying.
So the banks have to find a way, number one. Number two, it can, they have to, the interest rate, you are talking about interest rate, these escapes the public debate in India, probably in all countries which have a this socialist past. I think people are very happy when they see deposit rates are going up.
High
What they don't understand is that it is actually adding up to the whole inflation theory, and
Yeah, their money goes out. Much
their
more
money
money
goes
goes out
out.
of the inflation.
Right.
Yeah, right.
And then, yes, you're right. But I must say that Indian investor has matured along from the 1992 Morgan Stanley days, when people queued up in front of, I myself saw a kilometer or more long mile queue in Dalhousie to deposit money in Morgan Stanley. They thought that this is an easy way to get more money. But that's not. It's a market investment. It has its own risks. So you have to distribute your risks, properly. That apart, so you are saying that the Indian banks are earning very high margin, which only
No,
means,
they're expecting. It's not that they're earning. Their target is to have a high margin, 3%
right?
margin,
So which means
which
that
is
they
not
have a very high cost,
expected. Yeah, they have a high
apart
cost,
from the
and
interest cost. Apart from the
yeah,
interest cost.
apart from the interest cost, they need margin because their cost is higher. One reason is they have a lot of brick and mortar, banking. But that brick and mortar banking, I think, because the earlier idea was that the interiors, the villages, they didn't understand. They do not understand the digital side of the banking, but they understand now. Now, if the QR code can happen everywhere in the interiors, so they understand now. So the banks also start thinking different way of banking. Number one. Number two, I think the banks also need to, leave with, they have to manage their credit such a way that the slippages are less. There should be incentive on that. So both added together. See, the margin we require for two parts. One is the my cost. Second is that, if there is I have to do provisions, there's a future slippage and all sorts of things. So they should manage their risk very, in a prudent way. Then only they can manage with a lower margin, which is, and in a competition and in a developed
And
market,
probably,
you
probably, probably we discussed this point, and we had been talking about this point personally also in our meetings and etc. That the Indian banks love to lend in zero risk environment.
yes,
They
yes.
look
No,
forward to
I mean,
that. They forget that lending is a business and business has its risks.
exactly. No, I would not give such sweeping that Indian banks. So PSU banks, especially certain banks, have done a great job in taking high risk lending, like infrastructures and all. That's why our country has grown. In fact, yeah, they have been blamed whenever they failed. They were blamed very harshly that why did you lend? So I mean, people should have asked that if they have not lent, you would not have get such good expressways and all. So I mean, it's our airports. Look at the thing what was there, and this all Indian public sector banks have lent. Let me tell you very very honestly, none of the private sector, none of the foreign banks in India are investing in such area. They are all looking for the retail credit, nothing more than that. Most of them, 99% of them, except maybe few like ICICI and Axis, they against reduce their lending to such
I think
infrastructure.
we discussed that at length in one of our
Yeah,
podcasts.
yeah. So the question is that they know there are risks and all, but they know how to manage the risk. And secondly, RBI has made the system much more. I would say that risk, low risk, and with a lot of checks and balances. So now slippages are less. let me tell you, the systems are much more robust, I would say, in this country. So we can think of a lower margin. It's not necessary that we should need at least 3% margin, which used to think always earlier. So I think we have to think about it. In that case, even with a higher deposit interest rate, you can manage with a low interest rate scenario for the lending, and both all can happen. The growth can happen. The banks can make money in the process, and that's why I think we should target. I mean, we should think in that way. Our mindset should slowly go into that area.
Right. So we have come to the last part of the discussion, and you have you being an investment banker, you have a past in banking, and you deal with banks. So you have been a little, probably or not. So let me put some words in your mouth. The RBI is a risk-averse organization. Now,
No, I would not say that. I would not say that. RBI is not risk averse, but RBI has looked for, has
no, what I'm
gone
trying to
throughout.
tell is that RBI has done a great job. I mean, Indian banks have not gone bust, or the people have not lost their money who have deposited in banks. That's very good. But the world is changing. You are entering in whether you are going to contribute to an exponential growth of the country. So these are the issues now. The issue is you have done banking one way, whether you can do banking in a little more another way so that you can take risks. I'm talking from the monetary policy or the governance side. So back to the issue where you have this, say, the interest rate. Now, Fed had already cut interest rate twice, right? RBI monetary policy is not cutting it down, and we are living in very high interest cost regime. Interest cost in India, in any case, is high. Then it is high for 2 years, and exactly at the time when we need investments, more investments to push the growth. So how do you look at this?
No, I would put RBI a bit of blame on that they put this inflation and growth in opposite way. I think they should look how you can have manage both together. This mindset should come. It's not that if I allow growth, inflation will go up. So my target is to basically inflation. Growth is the second this thing. That is not the right approach. I think they should think more into the growth angle, because if I don't have growth, it will be very difficult to control inflation in the longer term, because
Absolutely.
the supply side will have an issue. So ultimately inflation, so in the short term it may actually help keeping interest rate high, but on a longer term it will be very difficult, if we don't have a generate our own money in a much bigger amount of money. So that RBI should think about it, and I appreciate your view on that. I'm not the risk averse, but they give more focus to inflation, which is
What you were saying, we have
instead
already seen. If we go back to the 2010, 11, 13, 14 period, I mean, it lasted a little longer. So you will see that growth was slow, but inflation was high.
Yes, yes. So that's that will happen. I mean, so we to stop that, growth should always be kept on focus. I mean, that is a very basic thing. You cannot allow a growth to come down just because you have to control inflation. So this mindset should go out. I think this is a bit of dated mindset, I would say, in RBI. So they should think something different, new era of the world, where I think we have to balance this. This is what I can tell RBI. Otherwise, they have done a good job. They are doing a good job.
I'll not also fully blame RBI. The government says that RBI should take more risk and should cut down interest rates. But the same government in their GST decisions put different GST slabs for popcorn with caramel and popcorn without caramel. I
Absolutely.
mean, all nonsense.
Absolutely. All nonsense. Yeah, absolutely.
Uh,
We should.
what is your expectation? I mean, the last question, what is your expectation from the new RBI governor, Mr. Sanjay
So
Malhotra?
new RBI governor has come from the government. So I think, and he's a very talented person, not only from the educational background, from the, of course, he has never been a regulator. If I see, at least I'm not aware that he was ever in the Reserve Bank or somewhere. But, he's a very capable person and very,
I think we can add one word for our audience is that the IITs are not merely producing engineers. We have the best
yeah.
of the economists also from there.
We had another IITian in RBI earlier, Raghuram Rajan, and now the
Right.
second one.
Right.
Or even I think the even I think
The
Mr.
chief
Rao
economic advisor had probably is from IIT.
idea. So basically,
Previously, the previous one.
yes, yes. So basically, what I believe that he's a very capable person. So I'm sure we have just been there. So he will come with some right decisions and some consensus, because in RBI governor he cannot decide. He has to bring consensus. Also, we have to think about that. There is advisors. There are very other people whose thoughts have to be taken and then come to a conclusion. And he will do that in a right way. I'm sure.
Thank you so much.
Thank you. Pleasure. Namaskar.